Good morning, everyone, and welcome to today's webinar with Jordan and Hamish. Hey, my name is Nathan Barker. I'm the head of marketing here at Firmcheck, and I just thought I'd drop in and say hello, because you've probably seen my face on the emails that I've been sending you about the event. Just a little bit of housekeeping. The platform that we're using is very similar to Teams or Zoom if you've used them before, but the main difference here is we've got a questions and a chat tab down on the right hand side. So if you've got anything you just want to discuss during the event, then we recommend using the chat tab. But if you've got questions for Hamish as we're going, please use the questions tab, and you can have a look at what other people are asking, and then you can also upvote if you see another question that you like. And then at the end of the session, Jordan will loop around and we can ask any questions that are in there. We'll do our best to get around to everything. If we don't, no sweat. We'll have a list of all the questions and we'll follow up with you after. And I'll sit down with Hamish and we'll get answers for those. And yeah, that's pretty much everything. Feel free to drop anything in the chat, and otherwise I'll hand you over to Jordan and I'm going to disappear.
Thanks, Nathan. Morning, everybody. Thanks so much for logging in this morning and joining us. This is I think the 7th time I've had this conversation now with Hamish. Is that right, Hamish? Did it
Yep.
6 times on the roadshow, once now online. This is the first time we're actually doing it face to face, though. You're not actually looking at a video of yourself and nobody's talking back. We're going to be digging into Hamish's story in the next 45 minutes or so. So starting with how he got started as an accountant in his father's accounting firm, all the way through to the Xero story. Hamish, why don't we kick things off? You know, people might know you as one of the co-founders of Xero, but what they might not know is that you actually started life as an accountant in an accounting firm, and that firm was called OpenSide. So, you know, why don't we kick things off with the OpenSide story?
Yeah, absolutely. The accounting firm was originally called Jade Associates, which stood for John Osted and Doug Edwards. Doug Edwards being my father, and then it changed to Edwards Accounting, and then eventually it changed to OpenSide. And when it was called OpenSide, that's when it was, in my opinion, we kind of finally became cool, because we had a name for an accounting firm that wasn't name of people. And anyway, that's kind of interesting. So I think my story in terms of my accounting firm is probably not necessarily unique, but it's probably the business I'm most proud of in terms of what we managed to achieve and what we did. And because of what we did in our accounting firm, and the way in which we sort of approached and thought about the client experience and those sorts of things, that really helped shape the way in which I thought about how the internet and accounting software should operate. So the things are kind of connected. So I think it's useful to understand, sort of, even though we're going back into the dark ages a wee bit here in terms of accounting firms, you know, almost pre-internet. I mean, we had email, but we can go back a bit further and just talk about, you know, the things that we were doing in my accounting firm, which today are not necessarily unique, but back then we're starting to become we're sort of a bit different anyway from what a lot of other more traditional accounting firms were doing. So if we sort of started at around about, I think it was about 2001, I left the New Zealand Army, and I was a qualified accountant, believe it or not, but I was working for the Queen in the Army in New Zealand, and I decided to leave the military and go and do something else. And I didn't really know what to do. So my father just said to me, why don't you just come and work for me for a while and then figure out what you want to do? So I went into his firm, and at the time, Dad was doing about 250,000 New Zealand dollars in fees, which is not a heck of a lot. And he had about 5. I mean, it's also not at that stage, you know, in 2001, that was a reasonable fee base. He had about 5 staff. And so I worked with him, and we started getting things going. And after about 2 months, I sort of said to him, Dad, we're not making much money when you do the maths on this in terms of the fees we're generating versus the cost of the staff. And I sort of suggested that what we should probably do is get rid of everybody. Now, that's probably not something that anybody out there that's thinking about starting an accounting firm or has got an existing accounting firm that's trying to grow it or anything like that. Don't go and fire your staff tomorrow. But this was a little bit unique in that the firm that my father was running and the firm that I saw the vision for the future were quite different. But he agreed with me. And so we sort of asked everyone to leave. So we actually had a profitable firm, which was good because that meant the future viability of the firm was assured. The next thing we did is that we started working really, really hard just to look after our clients. And we knew that we needed to grow that fee base. $250,000 was just not enough. And there's sort of two ways we know to grow a fee base. One is get more clients, and the other one is grow the average fee per client. So whatever it was back then, $250,000, it was probably $1,000 per client. If we could keep the same number of clients, charge them $2,000 a year for doing more work for them, then we'd double our fee base. So what happened then is we sort of set, as I said, we set about working really hard to find new clients and to try and offer new services to our existing clients. And one of the things we did do actually is we just put the fees up on some of them. We just weren't charging them enough for what we were doing. The reality was they weren't paying enough for the services they're getting. So we had to raise the fees for some of them, which is never a nice thing to do, but every now and then you've kind of just got to do that. And that's a good old management accounting internal cost analysis thing you have to do on a job-by-job basis and a client-by-client basis. And if you're not doing that in your firm, you're probably missing a beat from time to time. I digress. And time and cost management, which is an exciting part of running an accounting firm, but not really what I want to talk about today. But what happened was the firm started to evolve, and I sort of realized I was actually quite good at the marketing and the sales stuff. And so what we did a short time later was we hired a couple of young, very capable ex-Big Four accountants to come and help us do the technical accounting work. And that freed up my time to do more of that sales and marketing thing. And what we ended up doing actually is we redefined my role, and this might sound really weird, but we redefined my role as the CEO of the firm. And being a CEO of a 4-person firm when your dad's in there is not really, you're not really a CEO. It's not like getting picked up by the limo in the morning and taken to work or anything like that. All right. It was more of a mind shift about someone needs to be in charge of the overall operation of the business. And so what happened was my job sort of moved from looking after clients to sort of trying to move all of the metrics of my accounting firm, or our accounting firm, I should say, in a positive direction. And there's a whole lot of really key metrics that accounting firms kind of run on. Most of us know what they are. And you want to see most of those, on a quarterly or monthly or annual basis moving in the right direction. So one of the things we also identified, and this was the other part to becoming the CEO, is that, and this is normal for a lot of small businesses, is that small business owners tend to spend a lot of time focused on doing the work of the business, not necessarily working on their business. So I'm working in my business, not on my business. That's very normal, and accounting firms are guilty of that as well. So one of the things about becoming the CEO is to say, well, actually, I'm going to work on my business more than in it. And so that's kind of the idea. One of my other guiding principles that we had with our accounting firm was that our firm is the number one client. And I think every accounting firm out there should have that as their, one of their guiding principles, if you like, in terms of how they operate your firm. You got to say the firm comes first, the employees or the staff come second, and then the clients come third. And hopefully somewhere in there is the tax department, but they can be way down the back of the queue in terms of importance. I'm telling you, the great enemy, the tax department of all accountants. But so that was kind of, again, that was just kind of like a mind shift change. We've got a CEO, a 4-person organization, and we're making our client the most important client of the firm. So a couple of interesting things there. The next thing that we sort of did is we wanted to bring on an independent director, someone that, and again, this is a 4-person organization, an independent director for a 4-person, this is insane. Like, why are you doing this? But I brought in an independent director who was the former CEO of various different organisations in New Zealand, including a very highly regarded national law firm. And he came in and he helped me out. And I kind of invited him to get involved for kind of two reasons. One was the independent director was there to keep us and me honest in terms of reporting against our budgets and our targets, and we weren't bluffing it, we were actually doing it. So that was one of the things, just to sort of make sure that there was that integrity and honesty and reporting against our results. And then the second one was there was a lot of stuff that he had done in his business career that I'd never done. So I needed some assistance in some areas that I just didn't even know how to do, things like developing strategic plans and stuff like that, which I'd never done before. So that was another thing that we did, independent director. That's not unusual with accounting firms today. And in my opinion, most small businesses should have some sort of independence at a sort of an advisory board level. And for a lot of small business, small and medium enterprise businesses, that person's actually the accountant. So I was actually fulfilling that role a lot for my clients in terms of being their independent director. The next thing that we did, and I've alluded to this right at the beginning when I started talking, is that we went through a rebranding and a renaming phase, and we decided to call ourselves Openside, which today there's lots of accounting firms out there with, cool, what I'd say cool names, not Jones and Jones partners, cool names. But so we were kind of one of the first accounting firms in New Zealand not to name ourselves after ourselves. There were a few, but we were kind of one of the first ones. And actually one of our brand colors was yellow, which is quite interesting. I've gone full circle with Firmcheck back to a company that's using yellow as one of its brand colors. And please be rest assured that I had nothing to do with that decision at Firmcheck whatsoever. I wasn't even consulted. I was just told, which is really cool. Anyway, the next thing that we did with the now Openside thing was we sort of stopped referring to ourselves as accountants. We realized that our clients and our prospective new clients, when they heard the word accountant, they had this kind of idea in their mind of, I don't know, sort of a dude with a comb over and a cardigan and a pair of fairly average shoes or something. I don't know why I said average shoes. That's weird. Sorry, it's late here in New Zealand and I've just got back from America, so I'm in a totally different time zone right now. Anyway, we stopped referring to ourselves as accountants because we thought that would be good. And so what we actually started to refer to ourselves as virtual CFOs. And to me, the biggest difference, the biggest change in the way in which we operated in our accounting firm was to refer to ourselves as virtual CFOs, because it enabled us to focus on the clients within our existing client pool and new clients that saw a benefit in a deeper relationship beyond just core compliance and tax work. So that was pretty major for us, and it meant that, I was talking about two ways to improve or grow your fee base, and that was the virtual CFO one, was the grow the average fee per client. So I wanted to have quarterly meetings with my clients. I wanted to be able to think about their business and things like, what can we do to help you grow your top line? What sort of ideas can we come up with you to save costs? What ideas can we come up with to save tax? And if you're the CFO of an organization, it goes way beyond just the core compliance work. So it was quite a big change in the way in which we operated. So I don't know. It's not unusual today. In fact, I think there's even a company in Auckland called Virtual CFO Limited. I should probably get some sort of royalty for that, but I probably won't chase him down. I actually know the guy. Anyway, the next thing that we did, and I guess this is the final point I'll make, that was a little bit unique and a little bit different, was that we started to measure and celebrate our success of our firm based on the success of our clients. So if our clients did well, if they grew their revenue or their bottom line increased or the value of their business grew, we would recognize that we were part of that success, and that's how we would celebrate internally and also externally our client success. So I'm not really sure of actually how many accounting firms that overtly do that, but we did that overtly, and it was really good. So if you lay out all of those sort of things up that I did, which was back then was a little bit unique. I don't think that's necessarily unique today. I think a lot of, if I can say, accountants today running accounting firms are a lot more entrepreneurial than the practitioner used to be back in the 80s and 90s. It was a different world. And I think when the internet came in, it definitely changed the way in which, accounting firms could operate. And so a lot more accountants became a lot more entrepreneurial and thought about their practice as a business, not as a practice. Anyway, digress a wee bit. What else did I want to say just to finish off this one? Well, the firm exploded and it did really, really well. And after about 4 years, we were doing about $1.6 million in fees. And at that point, we still only had a team of about 6 people. So I was still a 6-person firm, but our average fee per client and our total number of clients had gone up. And so the business had grown really, really well. And it was a huge success. And not a lot of people knew about it because it's just an accounting firm. But for me, that was massively valuable to us. And it was really cool. Then in 2009, I was too busy working with Xero, and so I actually sold the business on to Deloitte. And the partner that basically took over the clients is still there, and some of those clients are still with Deloitte today. So, the legacy lives on, I guess, to a certain extent, even though the yellow OpenSide brand's now gone. But that's business.
It's a great story, and I know you mentioned that some of the stuff you think isn't as new today, but I actually think the whole virtual CFO concept is still something that lots of accounting firms are trying to figure out how to get it to work. So for the people in here that potentially aren't that familiar with what a virtual CFO looks like what would you say are the key services that would fall under that umbrella?
Yeah, it's an interesting one because so the way I sort of looked at it was like, if I see myself as your CFO. Now, most small businesses can't afford a CFO. They can't afford I don't know what a CFO gets paid. Let's say it's 150 or 160,000 New Zealand dollars, or say 110,000 or 90,000 pounds, right? Maybe. Most small businesses can't afford that. So what you're asking the client to do is to see you as the CFO for a few reasons. And one reason is so that when you make suggestions to them that is not about their core compliance work, they don't freak out and go, why is my accountant telling me about ways I can increase my turnover? So that's the first part, is that you're going to come up with ideas and you're going to talk to them about things and you're going to suggest things to them. And then the second thing is to actually come up with those ideas, is to feel free to spend your time thinking about your client and how they can improve their business beyond just tax minimization. And then the third thing is to have the ability to actually deliver that. And the way that I did that is that I said to my clients, I want to see you every 2 months for at least an hour, hour and a half. I don't want to see you once a year. And so that's when we started building out like different packages. We had kind of, this is weird, but we had kind of like, it was almost like a phone plan packages. We had kind of like your basic, your next level up, and then your enterprise. And, that we did that with an accounting firm. Like, these are the list of services you get for different levels, and this is what you pay per month for those services. And we moved all of our clients, I think 95% of our clients paid us a fixed monthly fee. And then we did like 6 monthly wash ups for some of them. And sometimes there was one-off consultation pieces of work that we didn't really know but 95% of our clients were paying us monthly. And they were all, I don't know if you have this in the United Kingdom, but they were all on direct debit. So we just told the bank to give us the money. So every month, all the money just rolled in from the clients, and it made it so much easier for us to deliver the services. Now, the other thing, so those are the 3 parts to the CFO story. And if I think, if you've heard of, you obviously know Prax Ignition and all that, right? So when Guy started that and he was looking at that, he was kind of looking at what I did at OpenSide, and he was looking at like my basket of services, and what I'd built was very manual. It was a spreadsheet printed off that we used to tick the boxes for what the client wants, and then we'd come up with a a list of services and a fee that we charge for it, and we give it to them, and then they'd start paying us monthly, and that's how we operate. And then Guy took that idea and just evolved it and turned it into an internet business, which was really cool. And so, I take my hat off to him. He's done really well with it. So, but that's basically, in a nutshell, those were the 3 bits to being a virtual CFO.
Okay. And if anyone has any questions about this, feel free to drop them in the questions as we go, guys. And we can answer them as we get to them.
Am I supposed to be reading these chats as I'm going? Because
no, don't worry. I'll flag them to you.
Okay, cool. I'll keep them switched off in case someone starts saying something weird about me.
No, it's all good. You mentioned Xero right at the end there. You said that you started to get too busy for the accounting firm because of Xero. So I guess this is a nice transitionary point into the Xero story. So how did that all come about? Yeah,
okay. So for those of you that want to know how the whole thing started, this is it. This is how it started. All right. So when I was running OpenSite and I was out doing what I was doing, one of the things that we decided to do was to pick a particular market that we were going to specialize in. It didn't mean that we weren't going to look after other businesses, but we wanted to pick one area that we wanted to target. So we wanted to find a niche and go after that niche. And the niche that I decided to sort of go after was the tech niche. So technology businesses in New Zealand were still early 2000s. I mean, there weren't that many of them. It was pretty young. I mean, Facebook hadn't even been incorporated at that point. So, but that's kind of how I met Rod. I met Rod through a friend. This Rod Drury, the co-founder of Xero with me, and I met Rod, and I started to help Rod with his personal taxes and his various different things. Now, what had happened is that Rod had been working for a company called Glazier Systems, which was a IT services firm, and he and his partners had sold that business. I think they sold it to Arthur Anderson, and so he walked away with some money, and he didn't really know. Well, I don't know if he knew or didn't know what he was going to do with it, but what he decided to do with it was to basically to invest it in a bunch of other smaller sort of tech startups that he was interested in. And so I think there are about 3 or 4 of them. And Rod asked me to be the virtual CFO for each one of them. So he said, I need you to overwatch, make sure they file their payroll, make sure they file their VAT returns, make sure they meet this, blah, blah, blah. Make sure they do monthly accounts and that the cash flow is okay and all those sorts of things. So I was like, yep, no problems. We can do all of that. So I sort of said to him, well, if we're going to do this, then we're going to need to put accounting software into each one of these businesses. And so he goes, okay, so what is that? And I said, well, and in New Zealand, it was MYOB accounting. And so one day Rod came into the office and we said, right, well, this is the software we're going to use. And we're going to, so we showed it to him. And I'm pretty sure he said, Hamish, the software makes my eyes bleed. And I was kind of like, yeah, I kind of understand where you're coming from. We as accountants, we quite like it because we know how to use it. But if you've never seen this before and you look at it for the first time, I guess you just go, this is awful. So that was kind of the first catalyst for an idea that sort of started to grow in Rod's mind about, is there a better way to do accounting software? But the next thing that was a little bit annoying was that because of the way in which, and I'll move through this pretty quickly actually because it's a little bit boring, but in the old world with installed accounting software, the data was on the server in the office, right? Back in the days when firms had servers. In fact, some businesses still do have servers. Certainly in America they do. So some businesses still do have their own servers. So in order to get the data, the accounting information from the business to the accountant, the small business owner would get a disk and stick it in the hard drive, copy the accounting data onto the disk, put it into a courier bag, phone the courier, and send the disk across town to the accountant, which was me. I'd get the disk, put it into my computer, and then I was able then to do whatever I needed to do as the accountant in terms of looking at the accounting information. The problem with that is that it was slow. And when we had the data, the small business owner couldn't operate their accounting system. So if they wanted to send an invoice out, they couldn't. They couldn't look at the accounting system, and quite often we would then have to spend a certain amount of time actually fixing up the mistakes that the small business owner had made because they weren't accountants. They didn't really know how to use the software very well. Some of them did, some didn't. Some of them had bookkeepers. That was way better if they had a bookkeeper. But so, yeah, what we found was that, let's say, for example, I allowed 5 hours a month to work on a client. We were spending 1 to 2 hours of that time just getting the data and moving that around and getting it into a position where we could actually then start doing the valuable work of being accountants. So that's 20 to 40% of the time of the value of those 5 hours just lost because the way in which the technology worked, it was just, it wasn't very good. So we sort of, at that stage, the internet was sort of taking off, just starting to take off. I think people were actually finally figuring out what a browser was and all that sort of stuff. So we did try to use the internet to share that MYB accounting software, and it sort of didn't really work. And so what next thing that happened was that one day Rod invited me around to his house, and he had this amazing home office at his house. It was so cool. Anyway, it was way cooler than my office. Anyway, we went around to his office, and he said, "Hamish, look at this." And he showed me this accounting software, and I went, "Oh, what's that?" And he goes, "Oh, I built it." I went, "Pardon?" He goes, "Yeah, this is accounting software, and it's on the internet. Look, it's on the internet." And he showed me that it was in Internet Explorer 2 or whatever it was back then. And I was like, holy hell. It wasn't, well, again, yellow turned up because he made it yellow and brown. I'm not sure why, but I don't know, maybe there's something in that yellow. Maybe Xero should have been yellow, not blue. Anyway, we stole the blue color, by the way, off Salesforce. We thought that was cool. I shouldn't really say that because Daryl Gray, who works for, I don't know why I'm digressing into this, but Daryl Gray, who works for Firmcheck, and is one of the senior guys there, was the head of design at Xero, and he chose the blue, I think. I don't know. Anyway, I shouldn't say that. Yellow. Let's get back to the thing about Rod inventing his first version of Xero. And so he did it, and I sort of said to him, look, this is fantastic. Like I said, most of my clients could use this. This is really, really good. Now, so then Rod and I decided to start an online accounting software company, and we called it Pacioli Software. However, we sort of were, the time wasn't kind of right in 2003 to move this project forward. So we kind of parked it. Rod had just started another business called Aftermail, and that was exploding and needed his time. And my accounting firm was doing really, really well, and that needed my time. And we just kind of felt like the internet wasn't quite ready for what we were sort of talking about. Like the speeds weren't really there, and it just wasn't really right. Even though Salesforce was starting to grow then and was becoming a known sort of business, we just sort of thought it wasn't kind of right. So we shelved the project, and about 2.5 years later, Rod sold Aftermail. It was a very fast business, that one. They started and sold it in under 3 years, but they sold it. And I remember he phoned me and said, I really want to do this online accounting, this internet accounting software business. And I said, awesome. I think that sounds like a really cool idea. I think that'd be awesome. And he said, do you want to help me with it? I said, yeah, okay. He said, you probably have to leave your accounting firm. I said, oh, we can deal with that. That's okay. Anyway, and then the next bombshell came through was he said he wanted to call it Accounting 2.0. And I was like, what is 2.0? What does that mean? And then he explained to me that, what 2.0 meant. And I was just like, it's very geeky, but okay. I'm an accountant. If you want to call it Accounting 2.0, Rod, I'll go with it. I'm sure you're right, whatever. Just so long as it's a proper double entry accounting system, I won't complain. So we started the company, and it was called Xero 2.0 Limited to start with. Luckily, shortly after that, when the original 6 guys that sort of started the business got together in a room, we changed the name to Xero, which was really good. But I think the key point to make here is that Xero was kind of formed out of a problem that a business owner, an entrepreneur being Rod, and the accountant being myself had, in that we fundamentally couldn't share the accounting data. So it was hard for me to deliver my virtual CFO services, and it was hard for Rod to get the services that he wanted, because and to not have problems in the accounting software because it was hard to use. And that is why Xero was born. it wasn't that a couple of guys got together and said, let's build accounting software. We were actually just trying to solve our own problem that we had running the businesses that we were running. And so that whole idea that, Xero changed the way in which we think about accounting data and the single ledger and all those sorts of things, that's basically where it all came from. And I think what's quite cool is that, Xero has been a catalyst. It's been this thing that has fundamentally helped change the accounting services industry around the world. And that's something I'm probably most proud of about Xero, not how many people use it or, the fact that it's blue. I don't know. But the fact that we've, because my heart's still with the chartered accounting and accounting industry, that's the industry I was trying to help, not necessarily the small business owners, but I like the fact that it does help small business owners as well. And I think that's the really key thing. It fundamentally changed the way in which accountants could operate. You could now, if you were given 5 hours of time for a client in the month, you could commit 5 hours of proper accounting for them and advisory work and those sorts of things, as opposed to moving data around and wasting the budget that the client had to spend on accounting fees. So that's it. Xero was born out of an idea that an accountant and a small business owner had trying to solve a problem.
And the rest is history, as they say. I'm sure.
Well, I don't think it's over yet.
No. I'm sure most people here will agree, just how much Xero has transformed the relationship between accountants and their clients. And I know that you're no longer involved in Xero, but you must have met hundreds, if not thousands, of accounting firms over the years. Do you have any stories of how Xero impacted and helped to transform those firms?
Yeah. So it was kind of interesting going out when we sort of first started Xero, and I remember doing the first roadshow in New Zealand, the first time we ever took the software out and started showing it to accountants, and I was like, geez, I hope they like it. And some of the feedback we got initially was a little bit concerning, but for the most part, people kind of, I think, certainly by the time I got to the UK and started presenting to UK accountants, they were like, we knew this was coming. We're glad someone's finally done it. And what we think you've done is a really good job. Although, wow, it's like super different from what they were using before, which I think was in New Zealand, in the UK, the main one was like Sage 250 or 500 or 1000. I can't remember, it was a long time ago. I could tell you a funny story about the meeting I had with the CEO of Sage, but we'll go into that one another day maybe. Up in Newcastle, shit, that was funny. Okay, so I probably met with 2,000 accounting firms face to face. That excludes like events and roadshows and stuff like that. It's actually going into an accountant's office and sitting down with the partners and all the people and presenting Xero to them and talking to them about what their firm's doing and how Xero can help them in terms of delivering the kind of firm they want to deliver. Because that was most of my job, was going out, listening to accountants and trying to explain to them how online accounting can help them do the sorts of things that they've only maybe not dreamed of, but where they would potentially like to take their firm. So I was kind of helping them with the strategic transfer from installed software in a server to moving to the cloud, and what does that mean? And the reaction from accountants has been unbelievably fantastic. And I mean, I genuinely take my hat off to the accounting services industry as a whole. Bookkeepers, chartered accountants, everybody that got involved, the consultants, anybody that, even some of the accountants that just say, I'm only going to work with 10 clients, and those, all those different firms all embraced the cloud pretty well. The larger firms took longer because I guess they had higher risks, and there were a lot of issues with the internet when it first came out about security and things like that, and where's my data? And I used to say, I don't know. It's somewhere. It's on a server in Texas. That's where it is. So yeah, it's not in the cloud. There's nothing actually up in the clouds. So you need to understand that cloud accounting they're actually all the data's in these huge server farms, which a lot of them are actually underground. So it shouldn't be called cloud accounting. It should be underground accounting. But anyway, that would be weird. Wow, I digressed off what I want to talk about. So I'll just go back. I'll get back to my notes. I'll get back on song here, Jordan. Sorry about that. Most of us became private practice accountants because we wanted to fundamentally help small and medium-sized enterprises be more successful. And we also understand that, like, small and medium-enterprise are very personal. Usually quite often it's a husband and wife team running the business. And if you can help them with their business, you literally help them with their life. So they can pay their mortgage off faster, and maybe they can go on a nice holiday. So you actually deliver them. This is one of the cool things about being a public practice accountant. You actually deliver human value to people as opposed to just saving them some tax dollars. And I think that's one of the cool things about being a public practice accountant is that you actually there's actually quite a human connection to the things that you can do to help them. Corporate's different. So, I mean, you're just helping someone, their salary's not going to go up because you help them necessarily, because they're just going to pick up their salary for next week. Anyway, I digress. And I sort of fundamentally believe that, you can't really help a small business owner unless you become the virtual CFO. How can you become a virtual CFO if you don't have access to the accounting information? Because if you're going to be a CFO, you have to come from the numbers. You can't tell a plumber how to plumb a boiler better. That's not what accountants can do, because you don't know how to plumb a boiler unless you're some sort of strange accountant that is a part-time plumber. But again, sorry, that's pretty crazy. That's where we've got to come from. So we have to come from the accounting information to be able to provide advice. That's our job as a virtual CFO. So once we put the accounting system in the cloud and there's zero cost to accessing the information, that unlimited real-time access by the accountant for the accountant is the big game changer. Because now there's no cost to accessing the accounting system. They can just go and see it. That was easily the biggest thing for the accounting services industry. And at the time when we did it, it was unique. There weren't that many other online accounting packages. So it did give us a first mover advantage in that regard. And I also think there were some other aspects in terms of our software, in terms of the way it was designed and things like that. But anyway, unlimited real-time access was the big number one thing for accountants. So then you sort of think further along this idea of the virtual CFO and what is zero, and so accountants could finally spend less time doing the compilation and doing the collecting of the data, and they could do more time on reviewing and analyzing information and providing advice to their client. The next big thing, that's that real-time unlimited access to an accounting system so you can provide advice, right? That's the virtual CFO model. Without it, you're in trouble. So the next big thing for the accountants really was the single ledger. So one ledger you use for the client to do the client stuff. And I know I'm waving my arms around. You probably can't. Where are the arms going? There. Anyway, so it's very late for me. It's like, if I was in America right now, it's like 5 a.m. So please bear with me. I'm hanging in there.
It's all good. We're following along.
Okay. Sorry, I just got back from America. I'm super jet lagged. So anyway, the single ledger was the big one for the accountants, because you could do the small business owner could do the accounting that they needed to do on their software, and then the accountant could do the stuff that they needed to do on exactly the same software. So you didn't have two different ledgers. And so that was a big advantage to accountants. And that was, so those two things, the single ledger and unlimited access, that was the two big things that got the accountants across the line. If you want to talk about the business owners, it was the bank feeds, so the live data feeds, which made it really easy for the the small business owner to reconcile their bank every day. That made it really, really good. And one of the benefits there is that if the small business owner can do their bank reconciliation every day and not make errors in the accounting system, it basically meant that the accountant, whenever they logged in, they could go, oh yeah, this accounting information is probably reasonably accurate. I'm not going to do a whole lot of work papers and reconciliations necessarily, but I'm just going to take it at face value in terms of providing business advice. If you're going to go and do compliance work, you're probably going to do a little bit more rigor in terms of reviewing those numbers and making sure they are correct. But in terms of looking at it and giving advice, the accounting system is good enough. So that one of the big benefits was to the small business owner was if was the dashboard and the way in which the dashboard presented the liquid position of their business once they'd completed their bank reconciliation. So they knew once they'd done their bank rec, which we made really easy for them to do. That was part of the design team. They did a great job in terms of designing the way in which the bank reconciliation worked. And I remember when we were in there looking at it, and Craig Walker was building it, and he showed me when you click on it and it sort of faded away and everyone sort of clapped, and I was like, okay, so we're supposed to clap when Craig, I mean, that's pretty cool, but we're clapping now. So that's the technology business. I was an accountant. I was just like, is the bank rec done? Is that good? Great. But the fade away thing was like, whoa. Anyway, technology thing. The things you get excited about in tech businesses.
They put the fifth on the screen these days.
The cool thing about it was that the business owner had, the bank was up to date on the left-hand side of the screen, and on the right-hand side of the screen, they knew where their next dollar was coming from, and they knew who they had to pay and when it was due. And that was pretty powerful to have that. They've never seen that before in accounting software. So again, that was a design element. The bank feeds were huge because it made it really easy for the small business owner. I mean, we used to have small business owners come to us and say, the first thing I do when I get out of bed is do my bank rec. I'm like, okay, that's cool. But I mean, that's how excited people got about it because it was so easy to do. And it is kind of, thinking about it, it is kind of fun to do. Like, it's quite a fun, enjoyable process using the Xero bank reconciliation process. So that was pretty cool. And I think the benefit of, one of the things that I sort of didn't, I guess, realize early on that Xero was going to achieve, that it actually did achieve, was that the way in which the software was designed and the way in which it worked sort of empowered small business owners with a bit of accounting information. All of a sudden, they kind of went, hang on, this accounting information is useful and it's easy to understand. And so then they were sort of knocking on the door of the accountant going, how come my debtor days are really high? And be like, pardon? Debtor days? Do you know what debtor days are? And they'll be like, yeah, I've been looking on Xero and they're like 62 days. What's that about? Have you got any ideas for how I could possibly? So what Xero did in the end was actually said, look, we're going to empower the small business owners to know a little bit more about the accounting side of the world. Now, small business owners today are probably a lot better than they were 20 years ago in terms of understanding accounting information, because I guess if you can understand a little bit of the financials of your business, it's going to have a huge impact. There's a reason why 80% of the world's CEOs are former accountants or former CFOs, because understanding accounting information is pretty critical to running a successful business. So if we helped do that, and if that was a byproduct of the way in which the software was designed and the way in which it was utilized, then we basically helped build that accounting questioning relationship that, again, sort of built on and fostered the idea that the accountant could be a virtual CFO. So yeah, Xero was pretty beneficial to accountants, and again, I'll say it again, I take my hat off to the industry. They did a great job in terms of accepting the technology and ripping into it. And I think it had some pretty massive benefits for small business owners as well. Yeah.
You mentioned bank feeds and how transformative they've been. And I actually read a statistic the other day in a Xero report. It came out this year. And it was that only 37% of clients have bank feeds connected in their Xero accounts, which seems incredibly low. Like, can you think of any reasons why that might be the case? Because it kind of feels like connecting bank feeds would be the easiest thing to do when getting Xero set up. So 37% just is quite an alarming statistic, actually.
Yeah, I mean, if I was running an accounting firm and I found out that I only had 30% of my firms, my clients had bank feeds, the next thing I'd do in the next 6 months is get that up to closer to 100%.
Yeah.
Like, why don't you want daily data feeds? That just makes complete sense, because it makes just running the accounting system so much more easy. I don't know how they're getting the accounting data. Well, they're getting the bank data in if they're not getting data feeds. Are they downloading and importing it?
Must be, right?
Let's hope not, because the world's moved on from that. We don't need to do that anymore. The technology's there that enables banks to share that data directly to your accounting system securely over the internet. So, yeah,
interesting. Moving forwards, you're no longer involved in Xero, but you are now involved in another business, Firmcheck. How did that come about? This is quite an interesting story.
Yeah. So Firmcheck. So what is Firmcheck? Firmcheck, first of all, I'll just quickly explain what Firmcheck is. So Firmcheck is AML software, anti-money laundering, blah, blah, blah. Software I shouldn't say blah, blah, blah. I'm not going to go into all the other parts of what AML is all about. That's and most accountants understand that it's not just AML. Anyway, Firmcheck is AML software that enables accountants to meet legal and professional obligations. Basically, that's what it is. It's a piece of software that helps you meet your compliance requirements in terms of the legislation that relates to AML. So what I'll just quickly, if I can, explain to you how we got to launching Firmcheck in the UK around about 6 weeks ago. A little while ago in New Zealand, we had some legislation change around the way in which trusts operate. And I spoke to an old friend of mine that I went to school who was a bit of a code cutter. And I said to him, do you want to help me build some software to help accountants manage their trusts better? And he said, yeah, okay. So we ripped into this and we built this application and we delivered it out to the accountants, and we started a sort of a small business, and it worked really, really well. And then as that evolved, because software as a service, is an ever evolving product, that's the point of one of the points of software as a service. But anyway, as it evolved, the accountant said to us, really like what you've done with trusts, is there any way you could do the same thing for companies? And so we said, yeah, sure. So we went away and we built a company management tool for accountants in New Zealand. And we called the company Connectworks, and that business is alive and well in New Zealand today, and it's got around about 500 or 600 accounting firms using it, and it's doing really, really well. So I was sort of chairman of the board, and we're sitting around the board table, and the question is, well, how do we scale this business beyond New Zealand? And I said, I think we should go to the UK. I've had great success in the United Kingdom. I thought that the accountants in the UK were probably some of the fastest adopters of internet technology in terms of my experience of working with Xero. I said, I think we should go to the UK because their rules are very similar to New Zealand, and I'm sure they want trust in company management over there. So we started to do the research, and what happened was the accountants we spoke to in the UK said, we don't like your software, which was a bit of a bummer. But what they did say is we really like the AML functionality that you've got within Connectworks. So we went, okay, well, how about we start with that? So that's probably a good example of why research can be really useful, because we could have launched over there thinking we were awesome and then found out that no one wanted our software, which would be not very good. So what we then did is, it was about 8 months ago, I think it was something about 8 months ago anyway, we decided to take the AML code that we had out of Connectworks and put it into its kind of own piece of software, if you like, and give that a brand new name and everything, and then launch that into the United Kingdom. And so that's exactly what we did. And I think we launched about 5 or 6 weeks ago. It's pretty new in the UK. And as with all early, well, one of the things about software as a service is that, we launch the software, we get 100 odd customers using it, and we use that as a live test environment to make sure that everything it should do. And if there's anything that those first sort of 100 firms suggest that we should do, they go straight to the top of the list in terms of the development of the software. So those sort of super early innovator adopters of SaaS have probably the biggest impact on the development of the software than, let's say, the accounting firm that turns up that's number 10,000, because at that point, there's a lot of people going before. So there's a big advantage to being an early adopter when this new SaaS piece of software turns up on the market, because you will have a lot of influence on it. You have influence on it just by using it, believe it or not, because what we do as software developers is we basically look at the metadata, we look at how the software is being used and those sorts of things, and that helps us evolve the software. So that's just native within software as a service, web software. not that I'm necessarily a technology guy. Remember, I'm still an accountant. So yeah, when I buy my daughter saddles for her horses, I still cringe. I don't know what the hell's going on in that department. It's a lot of money for a saddle, but anyway. So deep down inside, I'm still an accountant. Luckily, my daughter's in bed; she didn't hear that. Now, so we've got big plans for Firmcheck. We're looking forward to getting to our first 100 customers. We're doing a great job of getting there already. And getting their feedback and evolving the product and seeing where that leads to. And one of the things that you have to do when you run a software as a service business or a cloud software business is you've got to listen to your customers and do what they kind of ask you to do, but do it in a way that maybe they haven't thought of before, because that's our job as being innovative designers and thinkers in the way in which software can help people solve problems. So the main focus for Firmcheck right now is to make the AML work that accountants need to do easy and fast. So remember that when we were talking about Xero, I said one of the biggest things that we did was we made accounting easy for small business owners. Well, we're going to apply that same principle, guiding principle of making AML easy for accounting firms. So they basically, you can't get it wrong. You're going to get it right. We're going to make it really fast, simple to use. You can sort of, if you like, push it down to the younger employees, if you like, in your firm. Let them just do it and they won't break it. Those are the sorts of things. We really want to make sure that you running your accounting firm, you are avoiding any potential fines that might be coming your way by not complying with this legislation. And we want to get ourselves into a position where the software is doing as much of the work as possible with minimal input from you as the accountant, and but still meeting all of the legal obligations that you have within your accounting firm. Now that's going to be quite challenging, quite hard to do, but we think we're already quite a long way down that road. So, I mean, at the moment, it's hard for us to sort of make any claims because we haven't got that many customers yet. We're still getting to the first 100. But once we get a bit further down the track, we'll be able to start sharing some data about the kinds of experiences our clients are having, our customers are having, and how that's all going. So one of the reasons why we want to save money is because if we can save time, and make it easy and fast, then you can spend that time doing other things, hopefully helping clients. The other big part of Firmcheck is education. One of the things that the feedback we've had from our research is that accountants are telling us that they're not as up to speed with AML as they would like to be, and they're not really sure where to go to get that education. So we already have online education available with Firmcheck, and we're going to continue to evolve that as we move forward and include that as part of the subscription for the software, so that you'll be able to stay up to date and meet your professional requirements in terms of your knowledge relating to AML. So we see that the education and the software kind of go hand in hand, because we need you to be, your professional organization requires you to be up to speed. I'm just having a look at my notes here if there's anything else I really want to talk about regarding Firmcheck right now, but it's more about sort of where does the future of this go to? And one of the things I've been talking to the guys about as executive chairman and talking to the senior leadership team and those sorts of things inside the organization, the software team, is to say what we really want to do is we want to find a way that we can make Firmcheck and the AML thing evolve it into a way where it becomes a net benefit to an accounting firm, not just a compliance matter that they've got to look after. I'm not really sure how that's going to work. That's something that we're internally discussing and thinking about, but that's where I want the software to go to. I don't want it just to be a compliance bit of software that just solves some legal requirements. I actually want it to, and this might sound a little bit, maybe a little bit odd, but I want it to be a piece of software that actually adds value to beyond meeting compliance, possibly creates I don't know if I should say this, but possibly creates a new service line potentially for an accounting firm where they can actually make money off this stuff, as opposed to wear a cost, which is what most accounting firms are doing at the moment. So that's a challenge that we're looking at. And I am coming to the UK. I might be there in late January, but I'm definitely going to be at Accountex in May. And I will be talking to accountants about, where they think, and this is the thing I want to understand, is where do we think we can take this AML software in terms of their practices and understanding how they want to use it and how they could see it evolve. And then I might even ask a few crazy questions. So if you're at Accountex and you want to talk to me about it, come and tap me on the shoulder, because I'd love to sit down and talk to you about it. So that's probably all I really need to say about Firmcheck at this stage. As I said, it's a early stage software as a service business providing robust AML software to accountants.
Nice. I'm conscious of the time. Just looked, and we've got 3 minutes left.
Sure.
So that's flown by pretty fast. And I guess wrapping things up, right, like you've shared your experience here of 3 businesses: OpenSide Accounting, Xero, and Firmcheck. And you must have learned a lot working across all 3 of those things. So if you could condense all of that down, what would be your biggest takeaways for the people that have joined us here this morning?
Yeah, strangely, I knew you were going to say that, Jordan, and I'm very sorry that we've rattled on a bit longer than we should have. So people are probably going to go get back to work soon. So what I will do is I will run through what I'm loosely referring to as Uncle Hamish's, because I'm getting a bit older now, so you can call me Uncle Hamish. Uncle Hamish's top 10 tips for accountants. Okay, so here they go, and I won't dwell too much on them. Okay, but I'll just rip through them. Number 1 is really look after your clients. Goes without saying. Help them make their business better. Number 2, become their virtual CFO, and tell your clients that that's how you see yourself, and explain what that means for them, so that they don't get surprised when you sort of offer them advice about things you should do. The next one is don't bill on time. Bill what you and the client think the work is worth, and that means potentially that the same piece of work you do for 2 different businesses could be billed at different amounts because of the life cycle of your business. Okay. I'm not saying time and cost isn't important. It is. It's a good management tool, but it shouldn't be a bit method for billing. Number 4 is pay your staff well, look after them, and if possible, give them an ESOP. Like I said, in my view, the firm comes first, then the staff, and then the clients, and somewhere way at the back is the tax department. Number 5, have a CEO whose job it is to improve all key aspects of your firm, so that it's a growing, sensible, vibrant firm. Number 6 is get some independence in terms of how you're operating. Having an external person coming in and giving you a fresh pair of eyes on a regular basis is invaluable, because when you're running your own business, you're stuck in the weeds and sometimes you can't see above them. So it's good to have someone come in and give you that perspective. Number 7 is have a strategic plan, figure out what your point of difference is, and don't be shy to tell people how awesome you are. If you are successful with a client and your client's successful because of something you did, there's no reason why you can't tell people that. Accountants tend to be fairly muted in that regard. Not very good at telling people how awesome we are, but we should be a bit more overt about that, in my opinion. We do make a big difference. Where are we up to? Number 8. This is an obvious one, I reckon. Get all your software in the cloud, and constantly be looking out for developments in technology, and how that can help you and your clients. This is number 9, and this is a slightly harder one to sort of get your head around. But and this point is use the technology, that's the cloud technology, as an enabler of the relationship that you have with your client, and to drive efficiency in your firm. And if it doesn't do either one of those 2 things, you've got to question why you're using it. And number 10, which is probably the easiest one and the most fun one, is to have a success party once a year with you and your clients and celebrate their successes. Give them some awards. Have an awards night. Have some fun with them and celebrate their success, because no one else will. So why can't you? So once a year, have a big party with them and have a few Stellas. I don't know. Anyway, look at that. 3 minutes it took to get through that, Jordan.
Amazing. It's the fastest you've done that one so far.
Yeah.
Hamish, thanks so much. This has been really great. I appreciate people might need to jump off now because we've just gone a minute past the hour.
Sure.
I'll just double check if there's any questions in the chat or the Q&A. There was one question, which is, when you structured your business on a per hour basis with existing clients, what's the first step in migrating them to a CFO service model?
Yeah, that's a really good question, actually. And I'm just trying to remember exactly how we did it. But what we used to do was we would quite often use the end of year compliance reporting meeting as a way of presenting our new service package line to them. So we'd do their end of year books, sit down with them, run through it with them, and then we'd say, hey, by the way, moving forward, this is how we want to operate. So we're going to bill you for the end of year work, and then starting in a couple of months' time, we're going to start invoicing you every month for this fixed fee, and that's what you're going to pay us every month, and that's how we're going to move forward. And we did not have a problem with any single client offering them that.
Nice. Okay. Another couple of questions that I got sent on LinkedIn. The first is 2 parts. If you could start again, what would you focus on more than you didn't at the start? And what would you avoid at all costs?
I don't know. I don't know if there's anything I would do differently in terms of what we focused on. Because I mean, we just went out, presented something that we thought we got right, and listened, and that was the key. I mean, and that's the job of a software, internet software provider, is to, especially if it's software as a service, right? I'm actually hoping to come up to Accountex and sort of talk to everybody about what actually is software as a service and how does it work with accountants, because I'm not sure everyone really understands it. But yeah, I don't know if there's anything we'd do that different. From day one, I just wanted to chase down accountants and tell them about how this can change their firm and they should introduce this to their clients. I wasn't trying to build a channel network necessarily, but that's kind of what ended up happening. What would I avoid at all costs? I don't know. I don't know. I mean, we did a lot of good things at Xero, and we did a lot of really dumb things, but I don't know if there was anything I'd avoid at all costs. We hired the best people we possibly get. We tried stuff. I mean, in the early years, that's when you want to make a lot of mistakes. If you're going to make mistakes in a business, try stuff, see if it works. If it doesn't, stop doing it, do something different. I don't know. Sorry, Jordan. I don't know if there's anything I would totally avoid. I mean, that's part of the evolution of a new business is don't avoid anything. Have a go. See if it works. Try it. If it does, great. Invest behind it. If it doesn't, stop doing it. So yeah, I don't think you should avoid anything at all costs. Don't buy a photocopier. Throw the photocopier out the window. You don't need one anymore. There you go.
Nice. You mentioned about hiring the best people there. How did you manage to sustain the values and culture in Xero whilst you were going through such a period of rapid growth?
Yeah, that's a good question. So the culture of the business was driven by the leadership, and we had a pretty insanely good leadership team at Xero. Alistair Grigg was pretty unbelievable in terms of our chief operating officer. Craig was pretty incredible CTO. We had some good people running the different strategies and the different areas of the business. We were all pretty young. We were working crazy hours. And there was this hype. There was this internal hype that this thing was going so well and was really exciting. I mean, the fact that we listed on the New Zealand Stock Exchange 11 months after we incorporated the company was just unheard of. So we were this kind of like crazy thing happening. And I think people got swept up in it a little bit. And it was quite new in New Zealand. I mean, there were other technology businesses around that were doing really well, but we were just slightly, I don't know, a little bit, I don't know, maybe we're into ourselves, but I think within a year we had around about 30 people, and a year later we definitely would get touching 70 or 80. So we were adding a lot of people, and I do know, later on we were basically hiring a person a day. So we're hiring like 365 people a year. At that point, I think it is very hard to sustain the values and the culture of the business. But Rod was a very big personality. You've got to understand Rod Drury is he's a pretty big personality. He maintains presence, and he's got some pretty impressive leadership characteristics. And so, he's a pretty easy guy to follow because he's super positive, like he's probably one of the most positive guys I've ever met. And so I guess that just sustained that culture. But yeah, we were all drinking from the Kool-Aid, we all believed, and yeah, it was kind of almost like religious fervor. We just were going for it and having a shitload of fun doing it, working our asses off. I used to go into the office I used to arrive at the office at about 7 a.m. in the morning, and there'd be guys on the tech team still there from the night before, banging away on a problem. I used to send them home and just go, get out of here, go and get some sleep, you idiots. You can't live off, what were they drinking? They were drinking Red Bull all night long. They've been awake for like 30-something hours. I'm like, you guys are bananas, go home, get out of here. Anyway, that's what it was like. It was a bit crazy. It was good fun. It was infectious. It was massively infectious and a lot of fun.
Yeah, I can imagine, especially given all the success you had. One final question. Where did the name Zero come from? Because you alluded to this slightly on the roadshow, and I think the story involved, I think you said a pizza box being thrown at somebody, which sounds quite interesting. So yeah, where did the name Zero come from?
All right, so I'll just try and knock this one out in a couple of minutes. So Zero was originally called Accounting 2.0 Limited, and the big problem with that was accounting2.0.com was just weird. Like, we were like, this doesn't work, Rod. Rod was still pretty keen on keeping it. He still quite liked it. And that was, I guess, his geeky kind of 2.0 thing coming out of him, which is all good. I understand that now, because now we're doing Web 3.0, right? So I don't even really understand what that is. But anyway, evolution of Web 2.0, I guess some point it has to become number 3. Probably number 4 will turn up sometime. But what happened is we decided one night to have a big discussion about the name. And so we decided to order in some pizzas, and we sat around and said, let's open this thing up. So we were all sitting around there at our desks, and we had this funny little apartment that we rented as our first office. It was not very big, and we crammed as many desks in there as we possibly could. And there were like wires on the floor, and there was just shit everywhere. Anyway, it was carnage. But I think Phil Freelinger was doing a really good job of trying to explain why he wanted to call it Mint. He wanted to call the company Mint, and he was trying to do a really good job of it. And Rod, I guess it was getting late, and I think Rod was just teasing him a bit and making some funny comments. And I think Phil picked up a pizza box and flung it across the room and whacked Rod in the face with it. And that was quite funny. But anyway, while all this was going on, Rod was on his BlackBerry and he was working some stuff out. And basically what happened is he got someone external from the business to go out there and find out what was a 4-letter .com that we could afford that made sense. That was his basically explanation to this person. And that person went out and she figured out what were the options that we could look at. And Zero was the most sensible one, because I think we paid $25,000 for it, for a 4-letter .com.
Wow.
And I think if we wanted Zero with a Z, it was going to be like $250,000. And back then, Rod and I were putting money into the company every month to keep it going. And I was like, I don't know if we want to spend $250,000. And Rod's like, no, we don't. 25 sounds pretty good. I was even going, 25 is a lot. And Rod's like, nah, trust me, it'll be all right. And I'm like, okay, I'll write the check. So that's where Zero came from. It wasn't actually a big, massive brand discussion, high-level thing. It was just, what's the cheapest 4-letter.com we could afford that made sense? Good old Rod got the job done in the end. And thank Christ it wasn't called Accounting 2.0.
You'd have to rebrand to Accounting 3.0 now then. Hamish, this has been great. Thanks so much. I know we've gone 10 minutes over, so thank you to everybody that stayed on a little bit longer. If there's any final questions, feel free to drop them in the questions in chat now. But otherwise, I think we're going to wrap up at this point. It's quite late for Hamish, and probably about time to get some sleep, I reckon.
Yeah, I'll be off to bed straight after. So hey, look, thanks everybody for listening in on the webinar, and I hope what I had to say was some value to you. Some of the stuff's pretty old now, but sometimes telling old war stories is quite interesting. So hey, thanks for listening, and I really appreciate it again, Jordan, for having me along to talk about this stuff, because it is fun for me to talk about, even though the stuff did happen quite a long time ago. So yeah,
still plenty of great lessons in there. Thanks again, Hamish, and thanks everyone. Have a great rest of your day.
Cheers, John.
Cheers.
See you, mate.